Welcome and thanks for joining us for our webinar entitled Empowering Multi-Asset Brokerages with Market Data. My name is Nikolai, Editor-in-Chief of FinanceFeeds, and I'm joined today by experts from a platform provider, a market data vendor, and a global exchange. Joining us today are Roman Nalivaika, who is CEO and co-founder of Trade Revolution Global, Richard Barden, who is Director of Market Data Sales at Cboe Global Markets, and Anthony Mulira, who is Director of Global Pre-Sales at ICE Data Services. Gentlemen, welcome.
Hi, Nikolai.
Nikolai.
Hi, everyone.
Gentlemen, before we start, could you start off by giving us a little bit of a description of your background and what you guys do at your respective companies so our audience gets a better understanding of your expertise?
Sure, maybe I will start. Hello, everyone. My name is Roman Nalivaika. I'm CEO and co-founder of Trade Revolution Global. We are a fintech company. Our software solution is used by brokerage companies and banks for building investment hubs and providing electronic trading to retail and institutional clients. This solution can cover multiple markets and asset classes such as equities, futures, options, FX, and of course, crypto. We serve clients in many different regions and jurisdictions, from America across Europe to Australia. And among projects that we are involved in are multi-asset brokers, educational projects, regional brokers, where the platform is used for domestic markets only. And also we are about to add a new use case. At the end of next month, we plan to release a new solution that can be used by neo brokers. That's what we do briefly.
Great, thanks, Roman. Richard, what about you?
Hi, Nikolai. Good afternoon, everyone, or good morning, or good evening, depending on where you're connecting from. My name is Richard Barden. I'm part of the global market data team for Cboe. I'm based in London, and I help look after the relationships we have with our various market data partners, data vendors, and most importantly, our clients who use a wide range of market data services available from Cboe. For those of you who don't know what Cboe's markets are, we trade US equities. We operate 4 exchanges there. We trade European equities. We run the Cboe Europe exchange, the largest pan-European equity market. We're also obviously most notably for our options and derivative exchanges in the US, hence the name Cboe, Chicago Board Options Exchange. And we also have launched a derivatives exchange in Europe. And last, but by no means least, we have a growing Asian exchange franchise, most notably in the shape of the Chi-X Australia and Japan businesses, which we acquired approximately 18 months ago.
Great.
Thank you.
Thanks, Richard. Anthony?
Yep. Hi, I'm Anthony Mulira. I am the director of our pre-sales group for real-time feeds at ICE Data Services. Now, ICE Data Services is a leading market data provider, which is part of the Intercontinental Exchange. My particular group is responsible for solution design, so looking at technical, commercial, and contractual aspects of onboarding customers to our feed products. We provide aggregated content from over 600 global sources in real-time streaming feeds or in historical tick and bar formats. So working closely with customers to make sure that they're getting the best value, they're understanding the requirements to consume that data, and then ultimately delivering the product to our mutual customers as well.
Great. Well, thank you, gentlemen. I'm glad to be joined by such an esteemed group of panelists. Roman, first off, I'd like to thank you for organizing this webinar and bringing us together. Could you possibly elaborate on sort of the reasons for doing this event?
Sure. The idea in general behind it is quite simple. With the topic that we are going to discuss today, we'll provide practical insights for brokerage companies that would like to add exchange-traded products to their offering. We see that trends like commission-free trading, fractional trading, make it really a hot topic, right? So that more and more companies looking to enter this area. And since the market data is one of the core components for such project, we decided to organize this webinar and share our experience together with Cboes and the ICE data service.
Well, I think it's great that we get a chance to discuss these important topics. Anthony, from your perspective, what are the biggest challenges for multi-asset brokers in handling market data properly? What do you think that such companies struggle with the most these days?
Yeah, I mean, I think they have a natural challenge in understanding that they want to provide broad and expanding services with regards to market data, but they also need to control cost and risk as well. So some of the challenges that they have include understanding that the data that they're using within their systems is clearly licensed. It's being consumed by the correct user types and use cases. They have predictable costs against that. And then from a more technical point of view, ensuring that they have stability and reliability of the delivery of that data, and also that they can deal with the ever-expanding volume of information that is being provided in a streaming format as well.
Great. Richard, what about you from your perspective?
So from our perspective as an exchange, I mean, most of the issues that Anthony has described are one step removed from us, because we are one of the 600 or so sources available across ICE's range of market data products and services. So our issues that we encounter when we interact with our brokerage clients and prospects are more around understanding the market structure. First and foremost, there are a lot of competing exchanges, believe it or not, certainly in the equity space, where you can go to receive a price for an instrument, both in the US and in Europe. There are so-called primary exchanges, but they no longer hold the exclusive distribution of data for a wide number of instruments. So there are a number of competing exchanges, of which Cboes, I'd argue, is probably the most prominent in terms of offering an alternative. So that's our first challenge, is quite a basic one, really, getting market structure understood. The other issues then which we come in contact with are then compliance, as Anthony alluded to, understanding that exchange data is a different animal, if you like, to OTC or FX data, in that we have certain rights and responsibilities and obligations, and our clients need to understand that some of those fall on their shoulders as well, in terms of reporting, etc. And the other issue related to certainly to one and to some degree to number two is the provenance of the data. Where exactly is the information that the broker is looking to make a product coming from, and is that company that's potentially going to supply the data to that broker, do they have the right contracts and licenses and agreements in place? So our issues are less around technology, are more around understanding the possibilities in terms of where I license my data, but then understanding the compliance and provenance of that goes along with the particular data sources and exchanges that I'm looking to contract with.
Great, thanks, Richard. And Roman, from your perspective as a platform vendor or provider, what are some of the biggest challenges that you're seeing among your, let's say, broker clients, for example?
Yeah, in general, I would agree with Anthony and Richard about the compliance and cost. And from our perspective, I will add also automation. So I would consider this aspect of the main challenges. And as a platform vendor, we try to address them as much as we can. Of course, we can do nothing with the exchange rules and licenses cost, but we definitely could help with providing the functionality that helps brokers to be compliant. Means allows to control the data usage in the way required by exchanges. By cost as a challenge, I mean not only cost for the broker, but also for the end user. Some of the functionalities in our platform allows to optimize cost for them as well. For example, by providing the option to use delay data or snapshots instead of real time and pay less in the result. In general, there is a lot of work with tracking data usage, and the more can be automated, the less work and potential issues for the back office team.
Mm-hmm. Great, thanks. Anthony, considering all of these complexities, right, of market data that you guys just mentioned, automation, cost, like Richard said, provenance of data, from ICE's perspective as a data vendor, is there some kind of like a how-to guide or best practices that are sort of available for brokers to be able to understand and understand all of these complexities and
I'd say
integrate
there's not, Nikolai, I'd say it's not as simple as having like a how-to guide. There are lots of different lenses that you can look at the challenge of providing market data, and that's why you'd want to engage with a vendor with expertise. So, for example, at ICE we have a variety of experts around the various different aspects to ensure that you can onboard the data and report and make sure that you're utilizing the data in the correct fashion, right? So there's my direct team that particularly valuable resource that can work with a particular broker to understand their needs and really help them design a solution to consume market data, not just from one particular venue, but multiple venues or multiple types of data. Then outside of my team, we have engineers with regards to connectivity. We have a team that specializes and understands the licensing details in a lot more depth and has relationships with data providers as well. So it's not as simple as necessarily having a playbook, but having a partnership with vendors that have experience in doing this and work with integrators like Trader Evolution, and work with Cboe to provide their data across the platform, really have a deep understanding of the ecosystem and making sure that, the broker can identify a need that their customers would like, and then help fulfill that so we can work in partnership with all of the people within that supply chain.
Mm-hmm. Great. And Richard, from Cboe's perspective, obviously you guys are a bit different. You're probably working with different types of counterparties, let's say. Is there something that you guys do on a regular basis where you're advising clients on best practices or how to or things like that? Or is it much like Anthony has described at ICE?
It would be great if there was, sort of a dummy's guide to market data, and we could all refer to that. But to sort of parrot what Anthony was saying, that there is no sort of simple guide. That's partially down to the fact that each client's requirements are different, and the the particular landscape or ecosystem in which that client sits is different as well, because that means you then get a number of different actors involved in getting the information down to the client. As I mentioned earlier, we sit, if you like, behind ICE, and they are the ones who interact with the client in terms of distributing the data directly to them. But then there's software vendors like Trader Evolution involved as well, and then you may have other firms involved in the connectivity, delivering the data to the client. So you can have 3 or 4 different companies involved in delivering data down to a single client. So it becomes, just from that perspective, more complex than some firms would like to believe, in terms of understanding how best they can get the market data from an exchange delivered into their systems. There are clearly people who can help. There are great data vendors like ICE who have a wide range of experienced people and help guide clients. There are great software vendors like Trader Evolution, again, who have experience here about helping firms move from a single to multiple assets within their platform, and how that can be achieved. And equally, there are market data consultants. We work closely with firms like, say, Rafa Hanna Limited, for instance, who can advise clients on a number of different aspects in the chain of data that moves from an exchange all the way through to their actual application and down to their clients.
Mm-hmm. And Roman, considering that you obviously have quite a bit of experience with probably existing clients who use exchange market data, could you explain to us how you would approach new customers in terms of advising them on sort of best practices from an integration perspective or a platform and user perspective?
Sure. As a platform vendor, we aggregate lots of experience from different projects we are involved in, from different regions. And of course, we share best practice with our clients. But depending from the project scale, sometimes it makes sense to involve consultancy companies that specialize in this area. And in any case, with the help of consultancy or on their own, broker has to discuss his structure and use case directly with the exchange as a primary source of the information. We help our clients with describing data flow in our platform, as well as usage control. This is a part of the information that has to be provided to the exchange in order to get the license. So yes, we do share our experience, but the primary source of information is always the exchange.
Mm-hmm. And Anthony, brokers are constantly trying to add new product sets to their offerings. It seems like the multi-asset offerings are getting bigger and bigger in terms of the amount of products that are available to, say, retail or institutional traders. But obviously, market data plays a large part in launching these new asset classes at brokers. How difficult is it to get market data for basically every market out there? Because it seems like a lot of this data would have to be fragmented in some way and things like that.
Yeah, absolutely. And there are definitely challenges around that. And that's where a market data vendor like ICE comes in. Our job, our role is to effectively create a single interface. So our customers can take whatever asset classes, whatever data they need, and it can be normalized, put into the same similar format to be consumed easily by us, right? So we have a few different ways in which we make it easier to consume different asset classes in different ways, whether that be common symbology, so how the instruments are identified. The API interface is one interface to go and get all of these different types of data as well. And I think extremely importantly as well is that as a provider, we're consistently reviewing and adding strategic content as well. So as the needs of the brokers' customers evolve, the data vendor is evolving as well, and ensuring that we have all of the data that those users will be looking for going forward as well. So the real advantage and value of partnering with someone like ICE or with ICE is that you'll have that interface and you can make those new data sets available relatively quickly and easily, overcoming some of those fragmentation and challenges as well, as opposed to writing to multiple different sources and having to maintain all of those different ways of consuming that data as well.
Mm-hmm. And Richard, with what Anthony just said, I'm assuming that a lot of brokers don't come to global exchanges directly for some of these specific reasons, right? In terms of if they want to offer every kind of product set that is relatively available in their region to their client base, ultimately the data is coming from an exchange or exchanges, but you sort of need a data vendor to make it all work for a multi-asset broker.
Yes, I mean, we, like a number of exchanges, we have a cloud offering. It's a fairly nascent one, but 99.99% of the clients that connect to us for market data typically do so over some form of a vendor connection, either a pure connectivity vendor or more typically over a market data vendor like ICE. And that's, yes, because they may not just need data from one or two exchanges, but they may have a broad range of data requirements which a vendor can help them with. It's one thing getting market data, but you then need, you need the instrument reference data, to understand that. You need corporate actions data, you need historical data in order to help build a service, and all of that are the kind of elements within the total vendor market data vendor proposition that a client can get real value add from. One point I would like to make about fragmentation is that fragmentation obviously can add complexity. It was, you could argue, simpler 20 years ago when someone knew that exchange A traded stock A and exchange B traded stock B, but they didn't, and that was how it was. But the flip side of fragmentation is not so much complexity, but choice. And that's what fragmentation has done within both the European and US equity landscapes, is it's given firms now a choice in terms of where they go to buy data from. And that choice comes down to a combination of, the coverage of the instruments, the liquidity, which means which translates into the reliability and accuracy of the data, and then how much commercially is this going to cost me? And so for an exchange like Cboe, fragmentation has allowed us to engage with a lot more clients and prospects who begin to understand that fragmentation means there are choices in terms of where they go to get stock prices from. So for someone like ICE, obviously, yes, they can help mitigate the fragmentation from a technical perspective, but from a contractual and from a simple choice perspective, I think it's important for retail brokers to understand that the fragmentation has actually been beneficial for them, because competition, as it so often does, and it's been no different in the exchanges, has helped to drive product innovation and reduce cost. And that's particularly true in the area of market data for exchange traded instruments.
Mm-hmm. Great, thanks, Richard. And Roman, from your perspective, in terms of fragmentation and some of the things mentioned by Richard and Anthony, how does Trader Evolution deal with these sort of possible issues and or advantages?
Yeah, it's one of the interesting questions. There are a number of aspects that may lead to data fragmentation, and in our practice we faced cases when we needed to combine a few different market data sources, and it's quite a bit challenge because each of them has unique APIs, and this means for us we have to build unique processes, unique development for each source, and it's kind of complicated the overall structure. But sometimes there is no choice, and we have to go this way. In general, I would recommend to use work with data vendor that can cover all the needed markets, such as ICE data services. They have quite wide coverage of the markets, and maybe use additional data vendor just as a backup solution. This will simplify structure, maintenance, and probably cost as well. Another interesting case we can touch in context of this question is when a broker had access to a number of different stock exchanges into one platform. He can easily face with the situation when tickers crossing. So it means it is still the different instruments, but with the same ticker name. So it is very simple to solve it on the back office level by adding some suffixes to the instrument name. But the challenge is the user interface, especially with the current trends on the simplified interfaces, right? There is no way to use these suffixes there. And basically, this aspect shows very well if the platform actually designed well to handle equities or not. So there are a number of other potential issues that brokers may face with when they combine a few different markets within one platform, because even if you talk only about equities, trading equities in US is not the same as trading them in Brazil or India or some other country. There are always some specifics related to market structure or regulatory. And this is where we see our role as really critical, because we work hard in not just implement those specific to certain market requirements, but most important, to make them play well together and not affect each other.
I see. Thank you, Roman. Richard, I know that brokers are required to classify traders as pro and non-pro, and usually keep records of who's using the data and who is the end user. For example, like rumor has it that exchanges require to monitor this kind of data, right? Usage data for regulatory reasons. And in some ways, I feel like that could pose risks to multi-asset brokers that are using this kind of data. How big of a problem do you think this is in your view, and how can these potential risks be mitigated for brokers?
I think it's less of an issue here in Europe or across EMEA. Typically we as an exchange would require someone not to report individual retail users. They can simply just tell us the number of retail clients they have, and that will suffice. We would require someone who is an employee of a brokerage firm, for want of a better word, to be reported slightly differently, because they're classified as a professional. So for us, we have basically two classifications: professional or non-professional, and different tiers of fees apply to those. It's slightly different in the US, where I understand that some of the regulators can require firms to check all of their retail clients and to make sure that these firms don't work for financial services firms in some certain roles, as that can then create additional reporting requirements from those firms. But as I said, in Europe, it's less of an issue. Just as an example of that, ESMA have three rough classifications for users within Europe. You've got professionals, you've then got experienced trader, or want of a better word, and then you've got retail. Typically, we would have experienced traders and retail under a non-professional classification, because that's what they are. We would only classify, as I said, someone who works for a financial services firm in some shape or form, and has that account under that name as a professional user. So, as I said, I think it's less of an issue here in EMEA than, say, it might be for retail brokers in the US.
I see. Thank you. And Anthony, in your experience with ICE, do you guys have any kind of sort of playbook, or from your existing experience working with different clients in different regions, sort of to help them mitigate any possible risks, or at least help them better understand some of these regulatory requirements in different regions when they're using exchange data services?
Yeah, absolutely. I mean, there's a few different aspects to it, and I guess the exchanges are regulated and they have to satisfy requirements there. That's a must. But they also generate revenue through these user accounts, and therefore they're very interested in them being accurate, right? They want to make sure that they're capturing the revenue for the value that they're providing to their customers as well. So they've got a multitude of reasons to enforce accurate distribution of the data. The way that at ICE we kind of package up and help people do that is kind of threefold. There's expertise, there's technology as part of the feed, and then there's tools on top of that as well. So with the experts that I mentioned earlier, we have a team of people who work very closely with the exchanges and our customers or the brokers to understand what the requirements are down to that individual exchange, right? So the exchange has to represent those regulatory requirements, and they might layer in some additional requirements around reporting or understanding of how the data is being used against their fee structure. And we'll work through that, and we'll help broker that conversation and make sure that that's clear. Then within the feed itself, will give some elements of a technical solution so that they can monitor and understand how and where the data is going, right? So that can be part of the distribution stack. And so they have some tools within the delivery that they can use to maintain some of that. And then on top of that, again, interfaces and mechanisms for them to understand and control and just really understand, monitor, and potentially report some of that information as well. So there's a few different aspects to make sure that they're really kind of helping understand that classification and report it properly as well.
I see. Thank you, Anthony. And Roman, in your experience working with customers at Trader Evolution, could you comment on or give some examples of kind of how your solutions help to mitigate some of these regulatory risks for brokers?
Yeah, as for our case, because of our software structure, our clients acting as a vendor of record, means the entity that controls data distribution and has to report back to exchanges about the data usage. So as a platform provider, we have to have functionality that strictly controls the data usage, also allows to do discussed classification, right? Also helps to sign electronic exchange agreements, helps automate collecting fees for the different types of subscriptions. So overall, our role is to provide needed mechanisms that allows broker to stay compliant with the exchange rules. As for regulatory, we do not touch it much because this part mainly handled by brokers.
I see. Thank you. As a follow-up, Richard, do you think that there's any kind of improvements that we could look forward to in the future? Probably, you know, more in the more broader sense with respect to the different regions that have all of these rules and different requirements. Do you think perhaps some of this might be a little bit more streamlined by the regulators and other government bodies that have a say in how you know, exchange market data is used and who is using it?
Good question, Nikolai. Just before I come on to that one, I just wanted to just maybe make a point about user classification from Cboes' perspective, which is it's certainly when we're dealing with retail brokers, we are less concerned than say other exchanges with the user counts, because certainly for our European and to certainly for a lot of the clients here in Europe with our US equities market data as well, we typically don't see them incurring any costs for retail end users. So we're happy with them, you know, reporting just a general number, whereas a lot of other exchanges will charge, you know, $1 for each retail client that a broker has. Therefore, they are going to be, you know, quite laser focused on making sure that those user reports coming through from the broker are highly accurate, and if not, then the dreaded word audit will appear. As I said, we don't typically charge for either our US or our European market data for retail brokers in practice here in Europe. Moving on to your point about do we see this changing? I don't have a crystal ball. I know that there are plans in Europe to the slow progress towards harmonization. Maybe we're seeing a consolidated tape being proposed by ESMA, the European regulator. However, when and how that will emerge, I think is still open to debate in terms of the exact timelines. I don't see exchanges necessarily wanting to fully harmonize here, because exchanges are now commercial entities. We are competing with each other for both trading and market data revenue. Therefore, if, as all commercialized organizations would see an advantage in adapting their processes, then if that means they introduce something that's slightly different to another exchange, but they see a commercial advantage in doing that, then clearly they're going to go ahead and do that. So I can't see there being a single market data set of terms and conditions and general user fees and classifications appearing from European exchanges any time in the near future.
I see. Thanks. And Anthony, do you have any perspective on this in terms of your experience, from sort of the regional regulatory perspective, maybe things have been improving in some sense over the last few years, and so maybe there is some hope for more streamlining, or perhaps there isn't. I mean,
yeah, I mean, I'd kind of broadly echo what Richard has stated as well. I think in general, all of the regulators are charged with a very similar kind of role, right? So they have to enforce, basically the similar kind of regulations. They want to ensure fairness in the markets, and understand that the right actors are performing in the right way. So broadly, they do have the same remit. So there's potential for convergence there because they're aiming for the same outcome. But that being said, they're not the only actor. And to Richard's point as well, you've got other people being creative and trying to understand, and maybe within those rules, find a point of difference and compete as well. And therefore, it doesn't necessarily seem like it's going to happen particularly soon for us to end up in a place where it's clearly understood and very uniform. It might trend in that way, but I feel like there's always going to be differences, because that's where people innovate and they make sure that they keep on pushing themselves forward to improve the services that they provide to their customers as well.
Mm-hmm. Great. Thanks, Anthony. Roman, do you have any comments on this?
Not our area, probably.
Okay. Well, actually, my next question is for you, Roman. What do you think are the important aspects of offering exchange-traded products that brokers often, let's say, ignore or miss? What could be useful for our audience to know, but easy to miss for clients, as part of the whole bigger picture?
Yep, that's a very good question. And in my view, it starts from choosing the right technology. Why? Because due to lack of experience with exchange-traded instruments, sometimes brokers are just not able to put together right requirements when they search for the multi-asset technology. And as a result, their choice could be not really optimal. And for better understanding, we could compare FX and multi-asset setup on the high level. So in the first case, which is FX, the number of instruments is quite limited. Broker has to deal with just a few dozens of instruments, and they're kind of static, means not updated daily. Real-time and historical prices for these instruments could be different from other brokers due to nature of this instrument type. Then many basic workflows could be done manually. I mean, if per few months you need to add a few instruments and upload historical data for them, it's not a big deal to do it manually. And totally opposite to that, when we talk about the multi-asset project, when platform is connected to a few different markets and handling, in addition to FX, also equities, futures, and options, the number of instruments is just huge, and there is no way to manage them manually, and this must be automated. Another aspect is that exchange-traded instruments are not static. This means every day some IPOs taking place, the listing symbol change, also expiration of derivatives contracts, and so on. So all these processes also require automation. Then data accuracy. It is possible that some corrections can take place on the exchange, and changes that corrections that are related to price or volume value. So the data should be reconciled in order to stay synchronized with the primary source. So because of all these mentioned processes, in my opinion, automation is the most important but often ignored aspect. In our case, we try to automate as much processes as we can using all the available to us APIs.
I see. Thank you, Roman. And Richard, from your experience, obviously Cboe being a global exchange, what are the things that you think you know, the end client, the broker, might ultimately miss out of the, you know, big picture of everything that's involved?
So I'm not sure there's any sort of tips and tricks like Roman that I can pass on. No sort of sleight of hand, unfortunately. But I guess the most obvious point would be to do some research, try to understand what what do you want to achieve and how you're going to achieve it, and talk to some people who might be able to help you get there. So one of the value adds we have as as part of the market data team is being able to help clients maybe better understand what they're trying to use the market data for, and also, are there any firms in the ecosystem that we work with that we can help put them in touch with? If they need a data vendor, we can put them in touch with Anthony and his team. If they need help with an application vendor, we can put them in touch with Roman and his team. And equally, we can try and work out for them, is Cboe market data going to be a good fit for them or not? So it's as I said, if they just do some research and get in touch, that's one of the primary ways that I think brokers can help themselves.
Okay, thanks, Richard. Anthony, from your perspective, again, working with clients and brokers directly, what are some of the things that you see them, like we said, maybe not really considering at the beginning of their search for appropriate market data and integration of that market data?
Yeah, I mean, I think Roman and Richard have covered a few different aspects. I'll probably cover off on one more practical around the delivery of the data as well. And it's not necessarily something that gets missed, but it has to be a consideration for any growth or looking forward around the way that the markets they're involved with will evolve and change as well. So it's making sure that you have kind of flexibility and room for growth from a technical point of view. As I mentioned before, the volumes of market data are only going up, right? There's more trading, there's more numbers and data being produced, and therefore you kind of have to have one eye on the future around how you're going to consume that, how you're going to do that. And at the same time, you want to make sure that you're reducing your footprint from a technical point of view as well. You don't have to maintain as many servers, as much technology, the different stacks as well. So from an ICE point of view, we've layered in a few technical solutions that can help do that as well. We pair them very nicely with commercial structures as well to make sure that any particular customer can grow with us as well. I'll give you a couple of examples. We have a multi-tenant solution where customers can make a connection in a data center to us. We call it a shared farm, and that means that there's lots of data available to them, but they only take down the subscriptions that they want at any given time. But we have the flexibility to add more and different venues very quickly and easily to that same delivery. And then going past that as well, we have a partnership with a firm called Megaport, which means that we can make our data available in all of the commercially available cloud providers as well. So there you're getting almost flexibility on flexibility, where you can grow with us with regards to the types of data, and then you get flexible storage, flexible compute, and various different pieces as well. So it's making sure that you have a full consideration of all of the aspects of consuming market data and understanding where it's going from that aspect as well. And make sure you partner with a provider that understands that, like ICE do.
Great, thanks, Anthony. And my next question is actually also for you. Cryptocurrencies are unmistakably becoming very, very popular, and they're very high demand these days among traders, and obviously now at multi-asset brokers who are trying to or are implementing them into their product offerings. Can you talk about some of the changes that you see happening in the crypto space and how this asset class and nuances associated with it may impact market data delivery going forward?
Yeah, absolutely. I mean, the digital asset space is growing rapidly in lots of different ways, right? The volumes that are traded are going up. The amount of assets and the types of asset, the coins, are growing consistently as well. So we're seeing that kind of change, but we're also seeing a growing maturity in the space as well. You know, the exchanges are becoming more like traditional exchanges and have more and different aspects to them that make them look a lot more like the traditional asset classes as well. At ICE, we partnered with a firm named Blockstream because we believe we want to treat this like an institutional grade market data product as well. So within that, we ensure that the data is properly licensed and can be distributed to the right user types. Yeah, it's not coming off a website with some kind of disclaimer that can be interpreted in some different way as well. And then within that, we also layer some additional value adds, such as regional closes and additional statistics to the data as well, to treat it like a traditional market data product as well. So as the crypto digital asset world evolves, we as a market data vendor want to bring the same transparency and the same value that we do to all of the other markets for the data that other markets of which the data we provide is from as well. So we are definitely seeing a lot of changes and some growth there as well. I want to make sure that we provide brokers, all of our customers, with a service commensurate with the same value as the other asset classes as well.
Mm-hmm. Great. And Richard, from Cboe's perspective, how are you guys handling crypto, these days and the nuances surrounding it? Are you providing crypto market data to market vendors like ICE and then on to further to the end customer?
So we're sort of interacting with crypto, I guess, broadening it out into sort of digital assets in a number of ways now. We have a relationship with a firm called CoinRoots, who I may be describing them incorrectly, but I kind of view them as like an institutional order routing network for crypto currency trades. We've taken on board some of their content and we've used it to create a number of crypto benchmark indexes, amongst other things. We purchase, or we are in the process of acquiring an exchange, digital assets exchange called RSX in the US. I don't know what the company's plans are there. Not my pay grade, unfortunately. But yeah, you would assume that if we're buying a digital assets exchange, we will be looking to create more digital asset products, contracts that can be traded. And then finally, we powered a number of fractional share trading services. I know they're not technically speaking crypto, but that seems to be almost like a hybrid product between crypto and the traditional exchanges, and it obviously has been of great interest for the retail trading community of late.
I see. And Roman, in your experience with integrating data and working with broker customers who either want to implement crypto trading or already have, from your experience, what are some of these nuances that, how do you handle some of these nuances that Anthony has mentioned and then we broadly know about the crypto assets in general?
Yeah. We all see that how quickly cryptocurrency become a standard from being a trend. In our platform, cryptocurrency is one of the supported instruments, and we actually support both CFDs and physical instruments. And that is already not considered as something exotic by our clients. We see almost equal demand for adding crypto and or equities as a new offering among our clients. So just consider it as any other instrument type already. And I think it cannot be ignored by brokerage companies. They should have it as a part of their offering. So as for the technical aspects of dealing with it, in the early stages, we had issues with the APIs provided by the exchanges. They were less reliable than they are today, but they are evolving and updating their technologies to become more reliable and stable to work with. So that's it.
Great. Thank you, Roman. Guys, I'd like to thank you for your in-depth answers and covering these key aspects of exchange market data for multi-asset brokerages. I'd like to now turn it over to our audience. We have a few questions and comments that came in, so we'd like to address those. And everyone that's on the webinar with us now, if you'd like, there's a QA section in Zoom where you can write your question to us now, and we'll try to answer it. One of the questions that came in from Milos is asking, from the perspective of all four panelists, how well are traditional brokers like FX and stockbrokers prepared for the new decentralized markets, specifically crypto and, let's say, NFTs, from the regulation perspective? So KYC, AML, GDPR, and will they survive in the existing form, meaning these traditional brokers? I don't know, Richard, do you want to go first to kind of give your thoughts on this?
Okay, good question. I think we'll be interested to see how this plays out. I mean, there are obviously a number of firms coming up, specifically around decentralized finance. How it will play out in the capital market space, is a very good question. I mean, being a cynic, you would think that a lot of traditional brokers and banks involved in the retail distribution of investment products, may well just buy firms and buy an expertise, absorb that into their products, and continue. Whether we'll see some significant shake-up and whether a new kind of business will appear that will, as I said, shake up the landscape is a great question, and I probably wouldn't be sat here if I had the answer to that.
Thanks, Richard. Anthony, any comments from you regarding this question?
Yeah, I mean, it's a great question, and obviously, as I kind of mentioned, those digital markets are evolving and growing and changing. They are subject to the same rules and laws of other markets as well. Now, as they grow, they're going to get more scrutiny, and they're going to have to adjust for those as well. I still think they're going to generate a lot of market data, and it's going to be useful to everybody as well. But the way in which the traditional brokers interact, I think there's a couple of different ways as well. There are exchanges that are maturing for cryptocurrencies. There's some large ones. Some of them have had some challenges around those areas mentioned in the question, right? Making sure that they're dealing with the right customer and they know who that is. I think that the onus is on them to solve that, and they'll do some of that as well. But then also there's kind of almost a secondary market as well, derivatives based on some of these assets as well that can be traded in more traditional financial ways as well. So it can give people a view into or a proxy to some of those markets as well. And I see those are a lot more readily consumed by those traditional brokers as well, because they're usually structured in a very similar way to other products that they have as well. But as Richard mentioned, it's new, it's growing, it's evolving. If we all knew the future, we'd probably be having a different meeting.
Mm-hmm. And Roman, from your perspective, I'm just interested. Traditional brokers, I would venture to guess that Trader Revolution has worked with traditional brokers or does now. And so would you feel pretty optimistic, in terms of answering this kind of question? Because there are essentially tools available today even to, again, mitigate some of these risks, again, KYC, AML, and others.
I would rather comment it from the technology point of view, not from the regulatory. New technologies are there, and they are transforming the industry. Some of the market participants will be pushed out, some of them, but others would benefit from these new technologies. And if they invest, they could benefit from it and grow their business. So
I see.
I think it's always like that, and not related to our industry only.
Mm-hmm. I see. Thanks, Roman. There was actually a comment that came in, not necessarily a question, from Jack Bell. Jack said the classification of users that we spoke about today complicates onboarding processes, causes confusion for users, and leaves customers open to unnecessary audit risk. And sort of this policing or regulatory oversight and these classifications jake things, threaten competition, add complexity, and ultimately increases overall cost of data for all market participants. Anthony, I wanted to ask you, because we did speak about classification, and there are definitely solutions out there available for the broker customer and their end users. I think to mitigate some of these things that Jack mentioned, or am I correct?
Yeah, there are, but they're mitigation, and you know, fundamentally, I think with the classifications there and the revenue models of some of the exchanges, as Richard mentioned, you know, it's going to be the way for the foreseeable, because it's a point of their business to generate that and understand those pieces. I could see how it could be interpreted as a barrier. You know, vendors like ICE try and make it as simple as possible and as easy as possible through technology, through our expertise, through the tools that we provide to kind of reduce that burden. But you know, until people start competing and there's some downward pressure on the prices that those exchanges charge, it's always going to be there. And the requirement for that classification is a regulatory one to a certain degree as well. So there's always going to be potential overhead there from that point of view.
Mm-hmm. And Richard, what's your perspective on this comment? What do you think?
So yeah, I mean, working with if I can call them some of the more traditional or primary exchanges who still charge retail end user fees. Yeah, they are obviously going to want to make sure that they get their pound of flesh, and that, you know, because those user fees add up. You know, especially when you look at the size of some of the client bases that retail brokers have now. You know, showing my age, I remember when, you know, 5,000 retail clients was a big customer base. Now there are brokerages in Europe who've got hundreds of thousands, even millions. I think eToro has a bigger, north of 10 million users. So for those traditional exchanges that still want to monetize retail end users, then that will be a burden for brokerages who aren't used to having to accurately count and report and pay for end users. Cboe, you know, we certainly in Europe we've taken a very different approach. We don't charge retail end user fees, so you know, it doesn't really matter whether a firm has 1 or 1 million users. We're not going to come knocking on your door asking for you know, for a report on all the users in that brokerage firm. In the US, we have a slightly different model, but again, we've tried to lessen the burden. Here, we incorporate large numbers of end users into our minimum licenses. We have different license types as well that allow unlimited real-time data being used on certain kind of websites and apps. So, you know, we've, as an exchange group, I hesitate to say that we're more forward-looking, but we've tried to reduce the burden there on retail brokers. And again, another reason why you know, it's worth talking to someone like Cboe, not necessarily for us to you know, talk endlessly about our products, but you know, we understand the marketplace, we understand some of the different requirements that exchanges have, and we can just help provide some guidance and advice to retail brokers around this particular topic.
Mm-hmm. And there was one other question raised by Alex with respect to, and I think this, Richard, this goes along with what we were just speaking about in terms of the regulatory requirements and things like that you spoke about earlier today. The question is, you know, is the regulatory oversight really a question of where the multi-asset broker is located and regulated, or where those end users are located that are actually using that market data? And perhaps you can give us some insights from your experience, or Anthony could chime in as well.
So in terms of how this might affect users, or rather firms looking to operate a retail brokerage in the US. You know, I have very limited experience there, to be completely frank. I wouldn't want to start providing some sort of insight into regulatory guidance there. As I mentioned, I understand there are some issues. I think it's primarily around where the users are domiciled, and if they are seen to be working for a financial services firm in the US, then it may well be that even if they're trading on their own account, they're not classified as a retail user, but they're classified as a professional. As I mentioned earlier, there are a number of consultancy firms here who can provide sort of more detailed guidance and advice on this and other sort of related topics. In Europe, it's as I say, from our perspective, we're just primarily distributing market data to firms. Where those, whether those firms have users based in certain locales, it's not necessarily an issue that we can provide guidance on.
Understood. Anthony, do you have any sort of perspective on this in your experience?
Not much more to add than kind of what Richard stated, right? You know, it's making sure that you understand where your users are and then the regulatory environment there. The burden is on the broker to do that. But with regards to each individual exchange and environment, you know, there's plenty of people who can advise as to exactly how and what needs to be done from that point of view. With regards to the consumption of the data, we'll definitely help you understand all of that and give you that perspective. And then beyond that as well, you know, the exchanges might take a position based on regulatory standards. But again, it's making sure that you use all of the experts that you can to make sure that you understand the legal aspect there as well.
Understood.
And one sorry, Nikolai, one
yeah,
final
sure.
point on that, which
Sure.
would affect ICE as well as Cboes, is notwithstanding any government imposed sanctions on dealing with certain countries and companies based within those countries. You know, there are certain red flags that come up when we try to engage with certain counterparties. So that will be an issue that will continue for some time and evolves. But again, something else for brokers to be aware of.
Yeah, I see. Cool. Thanks, Richard. I'll take one last question here from Jeremy. Says the connectivity. I'm assuming basically the connectivity between servers and the exchange of data wasn't necessarily covered. Do I need to be worried about in individual server connections around the world, or are we talking about a more cloud-based system? I don't know. Roman, would you like to take this question, since I would think that you guys at Trader Evolution, this is an important aspect of the market data transfer.
I think it's more related to ICE, but I will comment from our side. For each client, we deploy individual infrastructure, right? And our software can be structured, set up in a number of different ways. So there is no standard way of doing it. And we stick to clients' requirements of how they would like to connect, what technology or options they would like to use. So we implement them on our side. So we really rely on the client's decision of how they would like to structure it.
Okay.
Anthony, Roman says you'd also
absolutely
answer this one.
So I mean, obviously, I spoke about like the proliferation and growth in market data volumes and various different pieces, but also combined with an appetite to reduce the technological footprint to deliver and consume that as well. You know, so at ICE, we do have many different ways that we try and achieve this. We own and operate the ICE Global Network, which is highly regulated and highly performant network, which means that we're in various data center locations around the world. And you can pick up and consume the data from us in various different ways. I did mention the multi-tenant farms that we have, also our Cloud Connect solution, which means that you can put that data into the cloud as well. So in the traditional world where you had to deploy many servers specifically for market data consumption. We're trying to reduce that as much as possible and provide the flexibility for the footprint to grow, but you to grow with that dynamically as well. So not necessarily putting more server hardware in racks, but making sure that you can pick up the data where you want and consume it at the volume that you need as well. So we definitely do see that. We want to move away from the traditional, placing a server per customer. There are instances where that's required, or they might want or need that particular kind of deployment. We can still cater for that, but we definitely want to make sure that there's technological solutions to reduce the footprint from a technical aspect as well.
I see. Great. Thank you, Anthony. With that, I would like to wrap things up.